day, everyone. I believe each and every one of you that watched the previous video I made about identifying the trend of the market and thereby spotting your entries. I believe you've learned something from it. Today, I don't really have much time here, but I have four rules, four guides I do normally use. And as a beginner, you need these four guides to take you to your next step. If you want to be profitable in market, you must make use of these four guides, which I'm about to introduce to you. What are the four guides? These four guides, they are so important that you can't do without them when it comes to trading. So the first one is, let me bring it back to you. The first one is, we're gonna be talking about time. These are the four guides. The first one is time. The second one is market structure. The third one is zones, and then the fourth one is chart pattern. So why is time so important when it comes to trading? Chart is so important that without time is so important that without time, you won't be able to identify the market structure. What does that mean? Before you identify the market structure, you have to work with times. You have to work with time. As a day trader, you have to start from depending on where the chart will give you proper direction of the market structure. As for me, I do start with the daily time frame, 4 hour, and then down to 1 hour time frame. You understand? So that is the reason why time is so important. It will make you to understand the movement of the market, to know the market structure. And then the second one is market structure. Market structure is so important. Why? Because if you don't know the trend of the market, you won't be able to know the direction of where you're going to buy or where you're going to sell. That is the reason why market structure is so important, because you cannot just come into the market and then decide on what to do without knowing the structure of the market. You understand? So the next one is zone. Why is zone so important? Zone is so important into the market. Why? Because it do help you to know where you're going to buy or when you're going to sell. The market says sell from resistance and then buy from support. So these are your zone. Zones are your support and resistance. The last one is chart pattern. Why is chart pattern so important? Chart pattern is so important because whenever market is at your zone, you have to identify the market structure. You have to first of all know what makes the market to move on. And then the things that make markets to move on are the chart pattern. It gives you what will makes the market to move on. And then when to spot your entries, when to know when you're to step into the market for a buy or for a sell. So now let me quickly give you a simple example from market structure to zone. I will break it down so you will understand. I don't have much time here. My time is short. Now, now, for you to identify the trend of the market, this is when to know. When the market is going an uptrend, you have to confirm the series of higher highs and then higher lows. For a downtrend, you confirm at least two series of lower highs and then lower lows. These are the lows. One, two. These are the higher lows. These are the higher highs. These are the lower highs. Then these are the lower lows. Now, these are your zones. These are your zones. These are your zones. Now, the rules of the market says buy from support and then sell from resistance. So where is your support within this place? This was a resistance, but when the market breaks it, normally then definitely the market has this zone has turned to support. So now you have to wait for this market to pull back to this support and then you go for buy. For a sell, you have to wait for this market to pull back to this resistance, then you go for sell. You understand? That is how it works. So now these are your zones. These are your zones. These are your zones. This is the zones I'm talking about. You understand? You confirm the market structure with a series of higher highs and higher lows. Then you go on zones to spot your entries. And then what makes you to take these entries is a chart pattern. So what are the chart pattern? This is where I'm going to introduce the chart pattern to you. On the chart pattern, we have about three different type of chart pattern. We have uptrend chart pattern and then the downtrend chart pattern. So for the downtrend, for the uptrend chart pattern, we have double top, double bottom. This is it. 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 So now this double bottom, some people do call it equal lows. Some people do call it W pattern. You understand? Or we have the inverse head and shoulder. This is the inverse head and shoulder. This is the inverse head and shoulder. That is the inverse head and shoulder. So now, mind you, the reason why I'm drawing this line, this particular lines you're seeing here, these are your neckline. So you have to wait for this market to break this neckline, come back, retest it automatically. This place automatically becomes, it's your neckline, but it has automatically becomes your support. So you wait for the market to come back, and then boom. Here, see the same thing. You wait for the market to come back, and then boom. So now you wait for this particular entry. So which are the chart pattern? You have to wait for it at the zone. And mind, this chart pattern cannot just be like, the chart pattern can form anywhere when the market is moving. But if the chart pattern doesn't form at the zones, definitely they are not useful. You cannot just spot entry when the chart pattern is at zones. You have to wait for it when it comes to your zone, and then you spot your entry. Now, so let's go. Let me clear this page and then give you more example. Because I don't have much time here, I'll be brief. I will explain it briefly to you so you can understand. Then the next video I'll be dropping on the theory aspect of it. This is the practical aspect of it. But I believe you all should learn something from it. So now, this is all I'm talking about. When it comes to a downtrend, this is it. You have head and shoulder, head and shoulder. Then you have double top, M pattern or equal highs. You understand? So now, this is your neckline. That's your neckline. You have to wait for this market to come back, retest your neckline that has broken and turned to resistance, and then boom, you go for a sell. This one, the same thing. You have to wait for this market to come back, retest the neckline that has been broken, and then you target the next resistance. Now, let's go on. The plane. This. Let's go on the chart. Let me quickly give you an example, and then I'll go. Hope you should understand what I mean. In case you have any question, you can simply drop your question on the comment section. I'll answer the question for you. Now, when you go on this chart, you will discover that this is daily. That, mind you, this is daily time frame. You discover that this market has been a downtrend. Why? Because it has been giving series of higher lows. Let me mark it out for you. Let me mark it out for you. This is the lower high. Market came back. This is it. This is it. This is it. This is it. You see? You see? Now, market was supposed to reverse from this point, but it came back to this particular resistance. So now, this is our target. If you were in the market at this particular point, so now we identify the trend of the market on the 4 hour time frame. Now, on the daily time frame, now come on 4 hour time frame. This is our 4 hour time frame. You widen the chart. Sorry, don't forget to mark out your resistance. Don't forget to mark out don't forget to mark your chart. This is it. This was the last resistance we had from this point, which market retested from it, and then boom, this is another one from this point. From this point, you understand? So now when you go on 4 hour time frame, you will discover that market came back to this place, and then it give us equal highs. This is the equal highs I'm talking about. And then you see as the market has pulled down to this point. But now that is a retracement. So now when this market was retracing this particular zone, it has been giving series of higher highs. This was not just an ordinary retracement. This is it. So this is when you need to be very careful when it comes to trading. If you don't confirm this particular chart pattern from this plate, market might fake you out. You think the market has changed the trend, of which the market is just going back to retrace the zone. So now the market retested it, and then now it has come back to the normal direction that has been given us. So now go on 1 hour time frame. But don't forget, guys. Go back to 4 hour time frame again. Don't forget where this market was going. This was the last high it created for us. You understand? So now look at what happened from the last high that market created. It break the high. It has retested a little bit. So from this retest, you may not be able to understand this place unless only if you go on 15-minute time frame. So on this 15-minute time frame, you will discover that this market is giving us an opportunity to spot an entry in the market. Now forget this line, let me remove it. That's the trend line I was talking about. So now I did not explain trend line to you guys. Trend line, why is trend line important to you when it comes to market? Trend line just help us to spot some zones in the market which are not visible, that only vertical line, that only this is vertical line to mark out our zone, that only this visible line, only this visible eye, we won't be able to see it only if we use trend line. So now what am I saying? We already identified that this market has been a bearish trend already, because it has retested the last resistance that was there. Now it's going back to the previous direction. Now when you go on 15-minute time frame, you will discover that this market is giving us the series of higher highs, of higher lows and lower highs, or lower lows and lower highs. Now, this is where you're going to take your practical analysis and then spot your next entry. So now you come here, don't forget what I said about the trend of the market. This is our last support. Don't forget, when the market is coming down, the last place that I stopped and then begins to push up is your support. And then the last place that I stop begin to push down is your resistance. So now you come here, you mark it out. This point, you still mark it out because this is where the market spike up. This is this was this was the support that turns this was the resistance that turns to support that market spike up and then come down again. Now, this is another zone. These are the places you need to mark them out on the 15-minute time frame. So now you discover that this market has been coming like this. This market has been coming like this. You see, now it has come back to retest this particular zone, as you can see. So now, what do you have to do at this point? The market is now at your resistance. Remember, the rules of the market says buy from support and then sell from resistance. So what do you have to do at this particular point? You have to wait for this market at this particular point to give you the chart pattern you need. So now this is where the chart pattern comes in. This market might give you, now I said something earlier about trend line. So now this is where you're going to use your trend line, because we don't know if this market will give us the particular what we are looking for at this zone or this zone. So now this is where you're going to target your trend line. Your trend line will start from here. Normally, I do draw my trend line from week to week. This is where your trend line will start from. You see? Now, this trend line is telling us that there is a resistance here which I've already marked. That one has shown to us already. It has shown to us already. So what are we supposed to do at this particular point? We have to wait for this market. Don't forget, this market, it almost break this resistance zone we are waiting for. But immediately when it breaks, it came back and then the candle came back and then closed below the resistance. So now what do we have? What are we supposed to do at this point? We're supposed to wait for the chart pattern to properly form at this particular point. This market might give us double top and then boom, we target the next entry. Or this market might give us head and shoulder. You see? Then boom, we target our entry. Or this market might give us triple top, then we target an entry. You understand? So now, if the market did not give you this particular place, because now we have two conjunction zone. What are the conjunction zone? What are the conjunction zone? What are the conjunction zone? This is your conjunction zone. This is it. This is it. These are your conjunction zone. So now when the market is at this zone, depending on what the market gives to you, if the market did not give you at this conjunction zone, wait for market to come for this zone and then you wait for another opportunity to sell from this point. If the market did not sell at this conjunction zone, it will sell at this conjunction zone. So depending on what the chart pattern gives to you, if the chart pattern give you clear entry at this zone, then you target the next high. But if the market did not give you this place, then you wait for this market to come to this point and then you target the next high. Now it is good to target this high. It is good. That's all about it for today. Thank you guys. Make sure you subscribe to my channel. And then there is a link in my description board. Follow up. That's my telegram. I do drop analysis. I do drop signal from there. You add up and then you turn on the notification board. Whenever I drop signal, you take for an entry. Thank you guys. Thank you. Thank you. Thank you. Thank you. Make sure you follow up for another opportunity for you